G'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. Over the next 10 minutes or so, I'm going to do my best to smooth out what has been, most recently anyway, if you think about the past two videos that I've uploaded to YouTube publicly, a little bit of a chasm, so to speak, or a little bit of a bifurcation in the actual analysis itself. Long term, of course, we are still very much so under the mindset that this trend is going to continue on its merry ways to the upside, and it's only a matter of time until it breaks out above these all-time high resistance areas, respectively speaking, across all three of our closely followed US market indices. However, if you think about the market analysis that I left you with as at or during Saturday, right, we were talking about that of a short-term pullback. Now, let's just recap, obviously, what has taken place during today's session as at Monday. The S&P 500, first of all, up 20 points, 20.52 points. Second of all, if you look over on the right-hand side of my screen, we're back above that 3,000 psychological round number. We actually closed just shy of 3,007 points. It was even stronger in percentage terms. If you have a look at the NASDAQ, that will do very soon. And really what we spoke about, okay, if you blend both of those, I guess, analysis pieces together, that being the market analysis on Thursday and that of the follow-up on Saturday, okay, and even into that pro analysis class over the weekend, we were talking about the opportunity, right, to liquidate some of your holdings in our top 12 individual trade list on the left-hand side of my screen if we were to see a bounce in the markets. Now, today, obviously, we have seen that bounce. It did come as a little bit of a surprise today. I'm very happy that that is the case, that we actually saw upside continuation in price action. However, right, that short-term bearishness itself, it still lingers over the actual market indices. Now, the good news for people, right, who have positions open through our top 12 individual trade list, you have been absolutely blessed during today's session. Let me just explain why that is. Now, obviously speaking, the S&P 500, just as the first market we're looking at, is right all the way back into pretty much this horizontal line on my screen at the moment right now. All right, we're still confined between that of this resistance area. We are still technically below it. As I scroll down through our top 12 individual trade list, pay attention to these earnings dates. What you need to do, and general rule of thumb is, if you are in an option trade, you need to close that position out prior to earnings. So as we sat down over the weekend, right, we were hopeful that the markets were going to give a little bit of a relief, a temporary relief, if they were to bounce to the upside. However, right, I still remain rather rock steady in the actual markets, pulling back down to close their open windows. Right, it hasn't updated on the Dow here, but let me just go back to the S&P to sell on back down and to close their open windows. So with this bounce that has now occurred in the markets, you have just been paid off, additionally speaking, okay, more into those original positions, 223.12, 230.59. Over the weekend, I changed this from a solid default line to a dashed line. So personally speaking, I did not take the trade up here at 239.08. However, if you know that you need to close the trade out and the earnings for Apple is scheduled to be Wednesday the 30th of October, this is giving you an additional $4.10 of intrinsic value into, right, those original positions that we've built, the difference between that of where we closed on Friday and now where we are as at Monday. So again, the market and a lot of these individual trades are giving you that opportunity to close these positions out, if you haven't already done so, at an even better return. So again, don't be swept up in the mania at the moment. Understand that if you are a rule-based, disciplined trader, a conditioned trader who follows legitimate rules, one of which being, right, to not hold at least the majority of a position, or hopefully anyway, the majority, if not all of it, into earnings, you should be looking to, as at the close of Monday, to close out of these positions. Have a look at Amazon today, up $28 after where we pulled back on Friday. The original entry is 1,748. The secondary entry, 1,753. We're back up here at $1,785. Again, Amazon, although ideally, right, the same for Apple, same for Amazon, the same for the majority of stocks in our top 12 list, ideally, we do not want to close out of these trades because we have positioned them right at those critical sweet spots, right where we expect, at least the analysis suggests, that we're going to see a multi-week, a multi-month, maybe a multi-month quarter rise, backing up to close some of these historical gaps that have been sort of opened, if you go back far enough, in Amazon's case, all the way back to July. If you think about Apple, here we are, we're trading at fresh new all-time highs. So again, the continuation of the broader trend to the upside. However, again, with those earnings reports due out, mostly this week, if not really the end of next week, we're pretty much through the entirety, outside of probably Baidu and one other stock in our list. What I'm trying to say to you right now is it's an opportunity, right, to bank these profits, to put them in your back pocket again, and just to sort of sit on your hands as the markets approach their earnings dates, or the individual stocks do, in our top 12 individual trade list. That, of course, is working in conjunction with our analysis on these market indices. So again, you've been very fortunate that the markets have popped, that they've taken a brief rally to the upside. The NASDAQ itself was up 73 points. However, we're right back into the top of that potential symmetrical sort of triangle, that being the resistance trend line of this chart pattern. And again, there's only, in my opinion, limited time to actually liquidate these positions for the best possible price. And I think today, as at Monday, the close, you are going to be very close to that best price prior to that earnings sort of announcement that will either fall due this week, or if not, next week in our top 12 individual trade list. Again, Baidu moving sideways, nothing to note there. Caterpillar, okay, 121, still close it out if you haven't already done so, up and around 130. Now with COP, my data hasn't actually updated. However, just use your imagination with me. Today it was a very strong session, I believe up over 3.5%. COP, all right, it closed, and again, I haven't pulled through the end of day data yet. It closed at 55.96 today as at Monday. So this is Friday's candlestick here. Today, we have a long day white Morobozu candlestick. We closed, just to repeat myself, at 55.96. Original entry 54.26. Again, more importantly, this green rectangular box that has been here for a couple of weeks now, it held, and it's starting to see that reaction, which is what we spoke about, which is fantastic. However, once again, we have earnings expected. This candlestick is Tuesday week, Tuesday the 29th of October. So again, COP is giving you a fantastic opportunity, although it's painful to close it out prior, obviously, to what we would like to do, right? It's another trade which is saying, hey, here is the profit potential, and this is probably the best trade or close to prior to that earnings announcement. I just wanted to make that very clear. Disney pulled back a little bit today, so did Google. Got very close to our target up here at $1,266. The original entry was $1,214. We closed down marginally, immaterially, 13 cents. Another opportunity to liquidate this trade as we move closer to earnings, right? The markets themselves gifted you an opportunity to do such a thing. You see IBM again, Microsoft, and to round out this, you've got Netflix with a little bit of a bullish counterattack candlestick here, a bullish piercing pattern. But again, this feeds back into the overall market analysis. This is what I was talking about as at on Saturday publicly, but in more and greater depth in that pro analysis class a few hours earlier on before that public update. Now again, the Dow, it still has this open window, pronounced open window. I still believe it is going to close. That's what the analysis suggests, even after that brief little pop. The NASDAQ itself still has its open window. So again, today, the difference between the closing price on Friday last week and where we are closing as at today is the bonus that hopefully you have acted upon to round out or to close out at least the majority of your holdings in some of the trades that we are holding in our top 12 individual trade list, right? You've really been paid off on Apple. You've really been paid off on Amazon. You've been paid off, so to speak, on ConocoPhillips, all right? Up here at 55.96. You've got Google back up around its sort of general area whereby you've already made a bunch of intrinsic value. You've got a few other companies as well that are pretty much just hanging in there and moving sideways. But the big key to this market right now is where we are positioned on the chart in relation to that of resistance and what to expect still, even after this very brief temporary sort of bounce, sort of more so the minor level of this trend, doing something like this prior to it making that legitimate break above these all-time highs. However, And having said that, it's always good to see the S&P 500 back above that psychological round number of 3,000 points. We failed to actually hold above it on this attempt here. We failed to hold above it on this attempt here. We failed to hold above it on this attempt here. We got very close as at Friday. But today on Monday, we've popped ahead it. The problem is, I think it's only going to be rather temporary, all right, prior to seeing the pullback and then seeing that definitive push to the upside. The good news, however, of course, and as I've been saying, is that we've been trading net long these markets for the entirety of 2019, beginning all the way down here at 2,525 points. Okay, so again, if you're still holding these longer term durated option contracts pushed out hopefully into 2020, right, you should be sitting here already with a smile on your face. But what should be even more exciting is the countdown to the breakout of this resistance area. That is where the huge returns are going to be made. Right now, yes, we do have some pretty decent returns through options if you're trading SPYs, the Qs, the diamonds, of course, depending the level extent of which at what price you got into. But we're getting closer and closer and closer to that break. But at the same time, I'm doing my best to give you, again, a level playing field in terms of the immediate reality moving forward. And I do believe that you have been blessed again and given an opportunity to liquidate out of a bunch of these trades prior to their earnings calls, whereby you need to be out of the stocks regardless, or out of those options regardless. Okay, so that's going to do us as at this Monday, very brief afternoon market recap. Enjoy your evening, everybody. It's a pleasure speaking about analysis and bringing this to you. But I do hope, okay, above anything else, that you are rather sort of level-headed and pragmatic about this, and you understand the reasons for closing out trades, even if, ideally, okay, you don't actually want to do it. It's the right thing to do. It's the hard thing to do. But the good news is we'll either enter or re-enter, right, on the markets back down here. And when it comes to individual trade positions, we'll look to get back into those original shares or those trades, depending on what direction that gap is and how the chart looks after that report is announced and how it's factored into the price action, which is what I'll do when it comes to the analysis and updating you on those new triggers moving forward. But again, just to repeat, a fantastic opportunity to close out some of those trades with this market pop. All right. All the best, everyone. I will see you back later in the week. We'll see what these markets do. But again, do not be surprised if this price action today is reversed either tomorrow, Wednesday, Thursday, or Friday. I'd be somewhat shocked if it doesn't do that. But the good news is if it doesn't do that, we still have the market open positions. On that note, farewell, everybody. It's James signing off on behalf of Pivot Point Trading. Farewell.